Hi, good afternoon. This is Larry Cox with Republic State Mortgage here on the Green Global Real Estate Education Network. And today we're going to talk a little bit about no money down options and low down payment options for primary occupancy residential mortgage financing. A shorter way to say that is someone who's buying a home to live in, not an investment property. Investment property still requires significant down payment. I don't see that changing anytime soon. But topic at hand, what is available for the person who wishes to buy a home and they don't have a whole lot of money to put down. Depending on your market area, there are a couple of different products available that I would like to touch on today. Before I get into that, we're going to broadly talk about VA loans. If you're a veteran, honorably discharged, it doesn't matter if it was, what period of time you served the country. It does not have to have been wartime duty. You don't ever have to have seen active duty. You just have to be in good standing at the time that you were discharged from the military service. And you can do a VA loan, no money down, no monthly mortgage insurance premium. It's the best deal going for a no money down option. You can't get a VA loan. So I would urge anyone who is a veteran and wants to buy a house to definitely make your loan originator aware that you are a veteran. You do have your DD 214. Vets know what I'm talking about, and that you would like to explore the VA loan option. It's a great deal. Widows of veterans are also eligible to use their husband's or their wife, their spouse's VA benefits. And that's something I actually closed a loan last month for a lady who's probably in her mid-70s. Her husband had passed away several years ago, but he was a veteran and he had eligibility still with his VA benefits. So that was pretty neat that at that age she was able to buy a home with no money down. It was a manufactured home, as a matter of fact. Now, my personal favorite loan, because it doesn't require that you have had to have been in the military, is the USDA Rural Housing Loan. I do quite a few of those each month. Love the program. A couple of restrictions on there. First and foremost, you have to buy in a county that is deemed a rural market. So what you would do is get with a qualified mortgage originator in your area and say, hey, I want to explore whether or not a home in the USDA area will suit my needs. Now, we're here in metropolitan Nashville. I'm in Williamson County, just south of Davidson County, which is Metro Nashville. And in this county, even though it is the most affluent county in the state of Tennessee, we have areas that are considered rural that are eligible for the USDA loan. We've got a community known as Fairview to the west of where I am right now in Brentwood, Williamson County. The entire community is eligible for the USDA loan. We're talking homes in the $300,000 and $400,000 range. We also have on the other side of the county a community known as Nolensville, and it has areas expensive homes, eligible zero down USDA financing. The catch would be when you get up into a more expensive property is, number one, you have to have the income in your household to afford such a loan, but you're also going to be capped. A family of 1 to 4, for instance, in this county would be capped at $77,000 a year in annual household income. And that's income from all sources, be it your job, child support that you receive, Social Security benefit, just any source of revenue in the household. Does not matter that, let's say your spouse receives income, you're at the maximum limit on your income, and you say, well, I just want to be on the loan by myself, we'll leave my spouse out. It doesn't work that way. It's household income. So 1 to 4 people, so 2 adults, 2 children, there's 4. It's going to cap you at $77,000 in this particular county. It's a little lower in some of the other counties. If you have 5 or more in your household, the income actually goes up to around $109,000. So that's how you can buy a $300,000 or $400,000 house. If you have, again, 1 or 2 breadwinners, 3 children, boom, there you are. 100% financing up to, well, theoretically no limit, but there would be debt to income ratio limits that are going to cap you. But I've actually done a USDA loan at $424,000, which was higher at the time than a Fannie Mae eligibility would go to. Phenomenal program. It's no money down. You do have to have reasonable credit. You don't have to have absolutely perfect credit, but it has to be reasonable credit. So any home buyer that wants to get out and buy a home, talk to your loan originator, find out if the county that you're looking, where you want to live, if there are USDA homes in that county. You might want to commute. You live one county over, perhaps. In our area, when we do the MSA, Metropolitan Statistical Area, whatever they call it, the MSA, Greater Nashville, it's an 8-county area. Well, Davidson County, where Nashville is, there's a few pockets that have USDA eligibility, not very many. But you come to Williamson County, where I am, again, we have USDA eligibility. Wilson County, right next door, lots of area. Sumner County, all around. The other counties surrounding Nashville all have USDA eligibility. So many people live in the suburbs and commute to downtown to work. So absolutely check with your loan originator. Find out. There are websites you can go to and also do the due diligence yourself. I suggest you work with somebody who does this every day, and they can point you in the right direction housing-wise. So real estate agents should be able to help you as well in that regard. So there are your first 2 options. VA if you're a vet, USDA if you're average run-of-the-mill person like I am, take advantage of the USDA program because it's not limited to farmers. It sounds like a farmer loan, but it's not. It's it's backed by the USDA. Same people that handle our food inspections actually have a mortgage backing part of their mission statement. So it's a great loan. If you want to live in the urban core, and again you fit within the proper bucket income-wise, I would urge a person in Tennessee to look at the THDA, Tennessee Housing Development Authority, THDA, as a down payment assistance program. Again, it's going down income limits. Their income limits are fairly similar to the USDA. It's more of a tiered system. There's a great website, THDA.org, and you can research everything yourself. But in a nutshell, what you're going to get is an FHA, Federal Housing Administration, most of the time an FHA first mortgage with a second mortgage sponsored that is underwritten by the THDA. There are no payments due on it. It's an interest-free second mortgage. It does stay on the property for 9 years, but over a period of time, the repayment on it gets smaller and smaller. So if you buy a house today, stay in it 9 years, that second mortgage that you used to make your down payment, it goes away over time. So it's totally forgiven. It's a great program. If you fit the box for THDA, there are no geographic restrictions. There are just the income restrictions. So there's your third option for no money down mortgage. Now, low down payment options. Fannie Mae has a 97% loan that requires 3% funds. I usually, if I have somebody here, there's 2 ways to do a low down payment. There's FHA and there's Fannie Mae. FHA is 96.5%. Fannie Mae's is 97%. We're going to want to compare those side by side, because if you've got let's say your credit score is a little beat up, a little rough, Fannie Mae at 97% and the MI underwriter are gonna be pretty tough to qualify. We'll probably want to look in that instance at the FHA is going to be a little more lenient, probably our path forward. But if you have absolutely perfect credit and you want a low money down option, Fannie Mae at 97% is a very good option. So FHA goes down to a 580 score, Fannie Mae is not going to go that low. Case by case, we'll just look at what fits your situation the best on both the FHA and the Fannie Mae. So those are two other options. Beyond that, Doc, that's pretty much covers all of them. No money down. It's going to be VA, USDA, or a THDA. In Tennessee, a THDA. Every state has their own particular organization run through the state. Is grant money, basically down payment assistance money. But every state has something along those lines. In our state, it's THDA. So we've got VA, USDA, THDA, or no money down options. All three of them are going to have income restrict. Well, excuse me, VA has no income restrictions. THDA and USDA will have some income limits. And then we've got VA, or FHA rather, and Fannie Mae, Freddie Mac for 97 and 96.5%. So that about covers it.
Okay, just one quick question for clarification before I let you go. You said the Fannie Mae low money down option requires a very good credit score. Correct? Did I hear that?
Yeah, you're going to have 660, 680 and up. So roughly a full 100 points better than the FHA.
And the FHA is looking, you're more like 560, 580. Is that what you're thinking with the?
I'm not going to quote 560. There may be somebody out there doing them down to 560. Our cutoff at Republic State Mortgage is 580.
Okay, well, let's use that. Yeah, 580. Okay, excellent. Well, that's good. Thank you, Larry. I appreciate it.
Thank you. I appreciate it, Andrea, and Larry Cox, Republic State Mortgage, right here in Brentwood, Tennessee.